Most importantly, today's Q3 GDP number is 2.1% year over year. Correct me if I'm wrong on this, Darius.
Yep.
But down from 2.9 to 2.1. So again, you're coming down the backside of that sine curve. You peak, you're rolling. And I'll give you a one wild guess. What comes after 2.1 when you're going down a roller coaster or down a hill? And the next number is lower than the other one because it's called a cycle. Is it going to be below 2 or above 2? I'm not going to give you the answer because I know that you're a power user of Hedgeye. You know the answer. You know, like, could it be 2.0? Maybe. It's not going to be 2.9. It's not going to be 2.5. And it could easily get all the way down within 6 months from now, which is how markets discount. They discount something that's definitely got a 1 or below that on it. So again, the bigger question for us is how fast do we get to the recession, not are we slowing. I mean, slowing is very obvious to anybody who has 2 eyes and 2 ears. 2 ears if you don't have 2 eyes to look at me or listen to me, and I can tell you. I mean, it's you could from God's eyes to my lips. Those are the numbers. It's not a debate. And truth training it, I guess, Darius. What else would you say about GDP this morning?
It's not
Q4 GDP. Is it going to be great?
It won't be great. It'll be worse than Q3, and probability that they slow on a trending basis through the end of the economic cycle is very high. Mm-hmm. That's been our call this entire year.
On a trending basis, that's a key point. That word trend can be important to define. So when you say trending basis, what do you mean by that?
Well, is the slope of the line that going back to the sine curve that you identified as the slope of the line still negative?
Right.
Obviously, you're going to get some sequential. If you have a bad sequential number, the probability that the
sequential guys being quarter over quarter, whereas trending year over year.
Absolutely, the trend in the year-over-year data is going to continue to go lower. You could get a positive sequential reading next quarter in the first quarter of 2016, which would not actually be unlike the first quarter of 2000 or the first quarter of 2008. You had 2 very, very good, strong sequential readings in those periods as well.
Isn't that problematic for the bull market narrative? Is that 2 sequential quarterly spikes in GDP were like literally right in the thralls of about to be a crash?
Yeah, totally, and that's the whole point of we say this all the time, and I've been saying this for 8 years almost. The sequential number doesn't mean anything. I mean, it has so little information in it as it relates to either making investment decisions at the security level or sort of making macro bets, at the sort of foreign exchange or fixed income level. I mean, the back tests are so low, it's almost just an irrelevant indicator that 4 or 5 days a year we all have to pay attention to.
Yeah.